Are you thinking about purchasing a home? Are you confused on where to start? Well, you've come to the right place. In this video, I'm going to go over the 8 steps in purchasing a home. If you haven't done so already, please subscribe to the channel, give this video a thumbs up. If you are getting ready to purchase a home, in the comment section below, go ahead and list what state you're buying in. Let's get into the video. So you're getting ready to buy a house. Where should you start? The first step in the home buying process is to get your finances in order. What does that mean? Do you have a budget? Do you know how much you spend monthly? What's your credit score? That's probably where you should start. If you don't know your score, most credit card companies will give you your score monthly. Or you can go to freecreditreport.com and get it there. The better your credit score is, the better interest rate you'll be able to get on your mortgage. Ideally, you want to be over 700, but with conventional loans, most lenders can work with people with 620 and higher. And if you're getting an FHA loan, you want to be 580 or higher. So getting your credit score as high as you can is a great idea at this step. You can watch this video here to get more ideas on what you can do for your credit score. Now that your credit's squared away, the next thing you should figure out is how much of a mortgage payment you can afford. If you notice, I didn't tell you to go talk to a lender yet. Most lenders will pre-approve you for your maximum mortgage amount. This amount may not be in your budget. You'll want to go into the meeting with the lender knowing how much you want to spend monthly on your mortgage. So how do you figure this number out? Are you currently renting? That's a good place to start, but keep in mind you won't have a landlord to call if anything breaks or you have to do maintenance on something. This is something you should budget for. Generally, your housing payment shouldn't be more than 28% of your monthly income. Once you have this number figured out, make sure when you're talking to your lender that he tells you how much of a house will get you in that range. Closing costs and down payments should be next on your list. Depending on the financing that you choose, will determine how much of a down payment you'll be required to bring to closing. Anywhere from 3.5% to 20% is normal. Remember, down payment and closing costs are not the same thing. On top of your down payment, you'll need to pay closing costs. Closing costs include things such as taxes, utilities, lender fees, and title fees. I suggest budgeting around 4% of your purchase price to cover your closing costs. So for example, if you choose to do a 5% conventional loan on a $200,000 house, you'll need around $18,000 to close, a $10,000 down payment, and an additional $8,000 for closing costs. Remember, this is just a ballpark, and your realtor and lender will help you get more accurate numbers. But you can start saving with these numbers in mind. Now that you got your finances squared away, you're ready for step 2. Step 2 and 3 may be interchangeable on other websites or videos. Here's why I think it should be in this order. If you don't personally know a realtor, we all know somebody that has recently purchased a home. You can easily ask them what their experience was with their realtor and if they would recommend them. A great realtor will guide you through the entire process, start to finish. They should explain the process to you, guide you through all the paperwork, and the main reason why I have them listed as step 2 versus step 3 is they'll have a list of professionals that they can recommend to you, to include lenders, contractors, inspectors, title company, and anything else you may need during the process. I've personally dealt with lenders and title companies that have given poor service. I've even lost deals right before closing due to this. Using trusted and known good professionals help alleviate any issues that may arise during the process. Your realtor will also have knowledge and experience to help you get any hurdles that may pop up during the process. Remember, you don't have to use the first realtor you talk to, you should interview several of them. You can interview them and choose the one you feel comfortable with that also came with good reviews. Once you have the realtor, you're ready for step 3. If you completed step 2, then your realtor will have a list of lenders that they've used in the past. And just like the realtor, you don't have to work with the first lender you talk to. You will need to get pre-approved, and you'll want to get this started right away. Your lender may ask several questions and will request documentation from you. They may or may not do a credit pool on you right away, but this shouldn't be an issue because you got squared away in step 1. This is a paperwork-heavy process, so get ready to do a lot of uploading. It won't hurt to have these documents ready before you contact the lender. Here's what you're likely going to need. W-2s from the last 2 years or more depending on your work history, pay stubs from the last 30 to 60 days, proof of other sources of income to include gift money, federal income taxes for the last 2 years, recent bank statements, usually for the last couple of months, details on long-term loans like car payments and student loans, your ID and your social security number. Remember, whatever the lender asks you for, make sure you get it to them right away. The sooner they have all your information, the smoother and faster underwriting will go. One of the main reasons for this, if any issues come up from the documentation review, they can be identified early in the process and you can start working on resolving it. It's better to have weeks to resolve something versus a couple of days before closing. I'd like to remind you about one of my comments from step 1. Remember, you'll get pre-approved for a maximum amount based on the information and the documentation you give the lender. And that's great, but here's where you want to ask them how much of a house you should be looking at to stay in the monthly payment that you decided on for your budget. So for example, you might be pre-approved for $350,000, but to stay in the monthly payment you chose, you might have to buy a house that's around $250,000. Another tip I'm going to throw out there now, and I'll remind you again later, is do not finance anything after you've been pre-approved without talking to your lender first. Financing anything can change your pre-approval status and may even disqualify you for a loan. So if anything comes up, please reach out to the lender and talk to them first. Let's get to step 4. The next step is the fun step, house shopping, but it can also get frustrating too. This part of the process is fun and why we're actually doing this. You get to go out to see what's out there and what's available. Touring homes and neighborhoods until you find the house that you want to purchase. You should have a list of what you want. It should be broken down into must-haves, would like to haves, and doesn't matter. So for example, you can say must have 3 bedrooms, but I'd prefer 4. I'd like to have at least 1.5 bathrooms, but I'd prefer 2 full baths. And I do not want a pool. This list will help narrow down the houses that are available to the ones that you guys can go see. Your agent should be able to set up an auto emailer that will email you a house that fits your criteria as soon as it hits the market. When you walk into the first few houses, remember to walk in with an open mind. If the houses aren't vacant, try to look past the belongings of the other people and envision your items in the house. If you're looking for fixer-uppers, try to envision what work you would do to the house to make it your own. After you see what's on the market, you might change your mind on some criteria that you thought were important at first. Or even vice versa, you might see some features that you didn't consider and now you like and you want to add them to your list. You want to communicate these kind of changes in your thoughts to your agent so you guys can both be on the same page and they can also update the criteria for the emailer that they set up for you. I caution here that you don't want to start settling for things. This is where the frustration can set in. If you had a great planning meeting with your agent, they'll know what's important to you. They should be reminding you of these things and pointing them out to you when you visit homes. If the market is tough, like today's market, you may start to settle on features that you didn't want or lower your requirements. I'm not saying you can't or you shouldn't do this, but the conversation should be had with your agent so you can both be on the same page. Are you changing your criteria out of frustration or because you've reassessed your situation? You never want to settle out of frustration, but after careful consideration. While you're going through your showings, ask questions. There really are no stupid questions. If you've only been a renter, there may be some things you've never considered. For example, maintenance and repair on different features of the house. Most agents should be able to give you great information or at least point you in the right direction. Agents don't know everything, but they should be able to point you to the right professional that can answer your question. So maybe you were lucky and you walked into the first house and you knew it was it, or maybe you've toured several houses, but you found the house you want to buy. The next step is the offer. You found the house you want to buy? Now what? This is where your agent's going to come in. They'll start by running comparables, also known as comps. These are homes similar to the one you want to purchase that have recently sold. This will help give you a value of the houses in the area compared to the house you're looking to purchase. If the houses in the neighborhood or townhouse community are all the same or very similar, this is a pretty straightforward process. You just need to make sure that your upgrades and your updates are the same. After gathering this information, your agent will come back to you and let you know if the house priced too high, too low, or right where it should be. Depending on your market, your agent will work with you on offer and pricing strategies. You'll agree on offer price, earnest money deposit amount, and what contingencies you want to pick. Earnest money is a deposit made to a seller that represents a buyer's good faith to buy a home. The money gives a buyer extra time to get financing and conduct any title searches, appraisals, and inspections before closing. In many ways, earnest money can be considered a deposit on a home, escrow deposit, or good faith money. A buyer is usually able to get his money back if the deal falls through, as long as the reasons for terminations are covered in your contingencies. If the house gets to closing, the money goes towards the buyer's closing costs. Some of the common contingencies are home inspection, mortgage contingency, radon, and several more. I can go over these in another video, but your agent will go over what is best for you and your situation. When you submit an offer, one of 3 things can happen. They can accept it, they can counter it, or they can decline it. They can counter for many reasons, such as closing date, earnest money amount, or even items to convey with the property, but the most common is price. You should have an amount in your head that you won't go over, and you'll be comfortable walking away from the deal if that amount can't be reached. Remember in step 1 and getting your finances in order. Stay within the price range that you set for yourself. Assuming your offer is submitted and selected, you're now ready for step 6, the contingency period. You're now under contract. That's awesome, but now there's a lot of work to do. You've now entered the contingency or the due diligence period. Depending on what contingencies were selected in your offer, you need to start scheduling and working on them. Was a home inspection selected? Your realtor should have a list of good and reputable home inspectors, and you need to get them scheduled as soon as possible. Your home inspector can usually handle termite and radon as well. Were any other contingencies selected as well? Deed, water, zoning, etc.? You'll want to schedule the correct professional to get started on those as well. Keep in mind the contingency period has a time frame. In Pennsylvania, the default is 10 days to get this done. So there's a good amount of work to get scheduled and completed in a short amount of time. Again, your realtor will guide you through this process, and if you have any questions, don't be afraid to ask. If anything comes up during your due diligence inspections, you have what's called the reply to inspection. You're able to address any concerns that you were not aware of or might have been brought to light during your inspections. You do not really want to nitpick on small items here, but you do want to address any major issues. There's 3 things you can do at this point. You can ask the seller to address or repair any issues. You can ask the seller for money at closing so that you can address the issues afterwards. Or you can terminate the deal and walk away. Again, consult with your realtor on what the best decision is for you. While your main focus is on the inspections, don't forget that your lender might still require documents from you. This is why I stress to get them any documentation as early as possible in the process. The one item that is ordered after you're under contract is the appraisal. The bank will hire someone to do a valuation on your home to make sure that the house is worth what the bank's going to lend you. If the value comes in at or above asking price, then you're golden. If it doesn't, there's 3 things you can do. You can pay the difference yourself, you can ask the seller to come down on their price, or you can terminate the deal. In Pennsylvania, in the contract, you have a date in which you have to get what's called a mortgage commitment. That is the next step after your pre-approval. The mortgage commitment is a letter stating that you're approved for your mortgage. I'd like to take a minute here to remind you something from step 3. Do not finance anything from now until after closing. I had a deal fall through as a listing agent because the buyer bought a brand new car the day before closing. When you finance things, it changes your credit profile. It may lower the amount that you're pre-approved for, or may make you not even eligible anymore for a mortgage. So please, at this point, no shopping. The finish line is right there. All your inspections are done, your mortgage commitment's in hand. Now what? You're ready for step 7, closing. At this point in the game, you've done all your due diligence, you have your mortgage commitment in hand. There should be about 2 things that you should be tracking. The first one is if you had any repairs required, either from a mortgage requirement or from your inspections, you need to make sure that they're properly completed. As soon as you're informed that they've been completed, make sure that you go and you inspect them to make sure that they're properly completed. You don't want to do this the day of closing or the day before in case there's something else that needs done. The other thing you want to do before closing is what's called the pre-settlement walkthrough. If the house wasn't vacant when you put your offer in or you did your inspections, there's a chance things may have been damaged when the people moved out. Maybe a piece of furniture was hiding something. What if your offer stated that the washer and dryer stay, but when you did your walkthrough, they're not on the property? Ideally, you'll do your pre-settlement walkthrough a couple days before closing, but sometimes scheduling won't allow for this. If your sellers are moving out up until the day of closing, then you'll have to do it when time allows. Another task you want to do before closing is call all the utility companies and get all the utilities in your name. Closing day itself should be relatively stress-free if you've done everything correctly up until this point. You want to remember to bring your ID and be prepared to sign a lot of paperwork. The vast majority of the time, closings are easy and straightforward. They usually take less than 30 minutes. After you finish signing all the documents, the house is now yours. Congratulations, you're a homeowner. You'll get your keys right then and there. You're now ready for the 8th and final step. You're a new homeowner. Let's get everything moved in. Not so fast. While the house is vacant, there are some things you might want to consider doing before you move all your items in. First thing you'll want to do is change all the locks. Do yourself a favor and get the lock sets that use the same key, so your front door and your back door and the top and bottom locks are all the same key. If the garage door has a keypad, make sure that you change the code so that it's your code. Matter of fact, any of the smart devices in the house, make sure they've been reset so that the previous owner no longer has access to them. If your new house has carpet, now's the time to either get it changed or professionally shampooed. Ideally, you might be able to schedule a day or 2 before closing to have it shampooed so it can be dry and clean for when you move in. This may not work out, however, as some sellers may not move out until the day before closing. This is also a great time to do a deep clean of the house. While the house is vacant and there are no items in it, now's the best time to mop all the floors, wipe down all the surfaces and the drawers, and make sure the house is clean so when you move in, it's ready to go. And if you haven't already, remember to set up your mail forwarding from your old address so if anybody doesn't have your new address, the post office will get you your old mail. I hope you found this video helpful. Remember, The home buying process can be long and stressful, but a great realtor will help you get through the entire process and over any hurdles that may arise. If you found this video helpful, please give me a thumbs up, and if you haven't already, please subscribe to my channel. See you in the next video.